Nvidia, the one stock to rule them all, has finally let the market down on earnings. That's right, with a double beat and raise, it was still not enough for Wall Street, and the stock is down about 3% in the after hours. There's a really obvious technical level to watch that will basically tell us if the AI trade is over in the short term, or if this is just a speed bump before the Jetson Thor platform in robotics will give us a hard system reboot back to the highs, because Nvidia only goes up, right? So welcome back to the Trade Brigade Midweek Show, where we'll take a look through all of the data points and we'll build a logical trade plan. My name is Matt, and if you're new here, hit the thumbs up button and subscribe. For additional resources, check out the links listed down below in the description, and stay tuned until the end of today's show. I've got 6 additional trade ideas to share with you that you won't want to miss. With that said, let's jump right into the charts. So we'll kick things off tonight with a much closer look at the SPY daily timescale, and we'll begin by acknowledging that, of course, in the after hours, we are trading lower. The bid-ask spread is currently 644.78 by 80, implying a forecast open somewhere near the lows of today's trading range. Now, of course, there's still a long ways to go until 9:30 tomorrow morning, so for the most up-to-date analysis, make sure to come back to the channel tomorrow at 8 o'clock Eastern Time for another episode of the pre-market prep. But given the information we have in hand, this forecast open is actually looking fairly concerning. The reason I say that is because as of today's daily close, you can see that we actually made a move to close over the balance range highs from here and the FOMC Jackson Hole high from back here Friday of last week. So that means that everybody who tried to buy the breakout is not only disappointed, but everybody, even the person with the best possible trade location from the lows of today's trading range, are potentially disappointed as well. And on the heels of a failed breakout here, I would think that if the market rotates to the bottom end of the daily range, when I say daily range, I'm referring to this box right here, then the threat becomes any sort of break and Brigade bolt underneath that level starts to really retrace this thin structure here through a regular trading hour session. If you recall, through the overnight headed into the Tuesday open, there was a pullback overnight, but it was just an overnight pullback. We did not retest or retrace this thin structure in the regular trading hour session. So once again, the major threat here becomes that this signal of a failed breakout into blue sky territories, with every long being disappointed by the threat of a possible gap red under green, gap fill reversal, lower high, if we make it to the bottom end of the range, my first thought is that, okay, base case technically tells us that we should look for support there, but I would keep a very open mind after a failed all-time high breakout for something that looks like this, once again to retrace this thin structure off to the left. Now, that's the bear situation to get there. When and if we approach this zone, I would put my thinking cap on and say, okay, this was the last major daily higher low in the trend count, and we certainly achieved an hourly downtrend to get there. If we set some kind of lower high underneath 642.75, if we break down from the overhead balance range here, it's very likely that we also drift back into an hourly downtrend. And therefore, is it possible that pulling back from the highest high in the trend count yields another higher low on the daily timescale? I think the answer is yes, right? Because although, again, this is a failed all-time high break, it is technically a brand new higher high in the trend count. So this situation here is something that I would monitor very closely for. And once again, your key level is going to be about 642.75. The battleground really says, like, do we support or do we not at that level? You're going to have to use market momentum as well as some market breadth indications to help us navigate that juncture. Because, of course, right now, Nvidia is an isolated segment of the market. Now, of course, you could argue semiconductors make up the majority of the move that we've seen higher over the last couple of months even, and that's certainly a valid argument. But it's one stock out of the entire S&P 500. And breadth today really wasn't all that bad. It was neutral to up, which we'll see later on in the video. So if Nvidia is going to be an isolated incident, then maybe this bearish outcome does not take place, and we actually do find support here off the bottom end of the range and continue to balance off. Of course, the only time where I would become more constructive on the long side is if this consolidation holds up and then ultimately finds a higher low above this previous breakout point, which we're currently failing. That level here is going to be at 646.20. The only other note is that the market did repair the overnight all-time high from this session. It was the Friday of what was now 2 weeks ago. That Friday overnight, Thursday into Friday, we did have an unrepaired overnight all-time high. Obviously, the market traded through that in the regular trading hours today. So the auction is technically complete at the highs outside of a poor high. Take a look at that on the market profile in just a second. Let's get down to the hourly chart so you can see this orange zone with a little bit more clarity, as well as the thin structure retracement that's available underneath us. So as of right now, the forecast open is somewhere down here, right? Again, you can see that right here, 644.76 by 83. So that would be right around in this zone, literally right where the white line is. So if the market rallies, I would be very open-minded to rejections in this area here, putting the pressure on to at least get to the bottom end of the range. The reason for that is because we have longs who are trapped from this overhead supply portion right here when the market finally started to break out over the Friday high from the Jackson Hole speech. So if those participants are, for the lack of a better term, screwed, then that lower high kicks off the start of a potential hourly downtrend. You could probably build the argument that you have left, head, and then some sort of right shoulder here, although I've drawn a very nuanced head and shoulders to make up that right shoulder, correct? So therefore, a move underneath today's opening print or tomorrow's opening print could be the move that sets up the short into the bottom end of the range. This would be a very simple range trade. If you're thinking about this from a balance perspective, all you really want to do in balance ranges, right, is fade the highs and then buy the lows, right? It's very simple. A balanced trade looks something like this. So if we're rejecting the highs, it makes more sense risk-reward-wise to be seeking shorts for this kind of outcome here to test the bottom end of the range, and then we reevaluate. So that's what I'm seeing currently, given the forecast for a weak open towards today's opening print, the lower third, and being underneath this trapped overhead supply. Now, if it's going to get worse, right, we talked about how maybe this sets up, right, and gets us here. Let's just say that we put in a weak bounce, lower high, and we have an equal low. If we move through this spot with a lower high, and obviously my timing is incorrect here, and don't focus so much on the timing, focus on the levels. If we're underneath this 642.75 with a lower high underneath 642.20, there's nothing here. There's nothing here. Once again, we've only tested this level through the overnight session headed into Tuesday, not in the regular trading hours. So if the market's going to come back and test that level, that's 639.85, that's the previous all-time high, but really the more constructive spot on the hourly chart, if you tuned into the Saturday update video, you know this, we've got the double bottom here, and the neckline is at 638.15. Again, not unreasonable that if this, let's just get crazy here with the patterns, right? Really, what did I just draw? I drew the head and shoulders we talked about to set up the reversal at least to the bottom end of the range, and then beyond that, we've really just drawn in a double top, right? And then underneath the neckline, you ultimately bring in the lower low, the hourly trend flips to down, and that's where we seek the daily higher low here at 638.15. Some kind of reversal on the hourly back up to this level would then strike me as being the first attempt at being bullish, reevaluate. If we do something that looks like this, I imagine we get new blue sky territories. If we reject, that's a much more concerning picture, and we likely have to use the QQQ, the NASDAQ side of the market, to inform whether or not this lower high is going to take place. There's a very clear divergence. We've been talking about this for a while. Everybody's really been talking about it. But the NASDAQ clearly has a lower high already in force on the daily timescale. So we'll get to that when the time is appropriate, but those are the levels, and that's how I'm going to be looking to navigate the S&P 500 explicitly into the end of this week. First thought is that opens down here, that rally and reject the orange zone, set up a right shoulder, looking for the bottom end of the range. First thought is probably to see if we get support because we are ultimately still in a sideways balance on the hourly chart. If we support there, great, we maintain neutral. Bulls only have total control on a Brigade bolt and clear acceptance over 646.20. The alternate, where things get a little bit more hectic and probably some more downside comes in, is if this rejects in here, comes down, lower high, and then we get this explicit lower high, that's where your thin structure retracement becomes a much more compelling argument underneath 642.20. That is the level to have on your charts. That's the number to beat if the bears are going to step up and really cause some more pain. Obviously, a market rally through this sort of brings us the same outcome we were just talking about if we find acceptance above 646.20. Okay, let's jump in here with some supporting evidence in terms of intraday anchored VWAP. Notice that technically the open in here is going to put this in jeopardy. If we start to fail underneath that, once again, just gives us another spot to potentially yield a lower high, equal lows. If these are going to start coming in here, again, first thought is that they may act supportive on the first test, but if you have a lower high coming back into the equal low, I would expect a breakdown on the second test, and the key would be the lower high underneath to then get this rotation here. Daily 20 SMA right at the neckline of the previous hourly double bottom, 638.15 being reinforced as a key level also. So that's what I've got for you on the Spider's cash in terms of the levels that I am mostly paying attention to and the concern about this zone and the trapped overhead supply. If you take a look at the market internals, if you're not familiar with the internals, check out the video tutorial in the first or in the top right hand corner first. But what do we see here? The question to ask is really, outside of Nvidia earnings, do we really see substantial sell-side pressure across the index? And the answer to me is absolutely not, right? Today, obviously, as we were making a new high, we didn't have substantial volume inflows, but it's not like they were flat to down. There's no major bearish divergence. I would say the same exact thing here about the advanced decline line, as well as the index score. Not the strongest read I've ever seen, but certainly not bearish. And if we take a look at the cumulative build out of the tick, once again, not bearish, but also not as bullish as it could have been as you're printing a brand new all-time high. So all things considered, I don't think that we have a substantial shift in tone yet in terms of S&P 500 rotation explicitly, but Nvidia being the heaviest weight component of the S&P, you gotta respect what Nvidia does off of the open via this gap down, and if we rally to reject here, I don't want to say the writing's on the wall, but I would certainly be a little bit less enthusiastic about all-time high breakouts considering the trapped overhead supply that we have here. Why can I call it trapped overhead supply? Because if we take a look at the market profile, notice that, of course, your value area is higher on today's session. If you're not familiar with the market profile, check out the video tutorial in the top right-hand corner. Value is completely above the Monday and Tuesday highs, right? If I do something that looks like that, your value area low is above that level. So on the open, this orange line represents the forecast open as of right now. Any rally rejections, right? That orange zone that I had up above on the spider's cash, it really correlates with the value area low, Tuesday's high, Monday's high. If we reject that zone, all of that trapped overhead supply once again should sell into the market, which would produce some downside pressure at bare minimum targeting the bottom end of the range, right? And then as we know, there's really thin structure here. There's some zero prints in the ES futures, right? There's literally some points in here where there's no volume traded at specific price points. So there's your overnight test of the low, but that would once again just turn into the target should we start to see acceptance underneath. Let's just go back here, this level, that level right there. The Tuesday pullback low, regular trading hours, 642.20, and then we would target firstly here, that's the overnight low that we were just looking at in the ES futures, and then beyond that, it's really the neckline. So everything adds up here, and once again, if we were to think about value area from today, this is the value area. What we were just looking at on the market profile is this exact thing right here, right? Value area is in this box from today's session. If we open lower, rally and reject the orange box, the actual, not the white box, the orange box, it's a rejection of overhead supply. And that at least should, in my opinion, bring us to the bottom end of the range here, rotating from top to bottom, risk reward like that. As we've talked about, clearly reevaluate 642.75. Do we bounce and stay in range? Fine, balance persists. Or things get weaker, a lower high underneath 642.20 rotates to the bottom end. All right, that is the major watch in the S&P 500. Let's take a look over at the NASDAQ because the NASDAQ clearly shows us a little bit of a different struggle here. Now, of course, everybody and their sister's brother's mother is talking about the head and shoulders. And fine, fair enough, right? This is a possible lower high on the daily time scale, and there's a, with Nvidia earnings, forecast open towards the bottom end of the range, sort of invalidating at least an immediate successful move in the upward direction. But even if we were to move through the upper portion of this multi-day balance range here, I still think the threat stands that you could still yield a lower high underneath this pullback low from here at 576.50. So even if Nvidia earnings were mildly surprising to the upside, even if we had a small gap up out of Nvidia, if the NASDAQ was opening here, let's just say right at the previous day's highs, I would still be talking to you about the lower high threat up against 576.50. Now, to the downside, it's the competition of the timeframes. We've talked about this in the pre-market show for what's felt like weeks. It's really only been since the Friday session. But if the market breaks underneath the 3-day lows here, which currently the bid-ask spread is 570.90 by 85, which is going to put us right around in here. It's right towards the opening print of today's session. If we break the lows, you still have to contend with the opportunity for a higher low here, just like the S&P. Where I think things get much more dangerous in the NASDAQ is if 566.50 fails, right? So let's go to the hourly chart now that we can identify that, right? We could still see how this is a lower high rejection, but we can also see how this is a higher low relative to that. So let's go to the hourly chart and start to get a little bit more nuanced and say, okay, if the market ends up opening on a gap down, or if we break and Brigade bolt under this level, should we be buyers here first, or should we just think to sell the market? My first impulse is to probably be a buyer on this potential level at 566.50. The reason being is that this hourly double bottom has not been retested on the neckline, right? We talked about how the overnight, sure, it moved through that thin structure, but we haven't done it in the regular trading hours. I think what the market would try to do in its first impulse is potentially look for longs off of that level. And then the question, I think where you could start getting more aggressive on the short side, is if the market rejects this after going through the thin structure, okay, fine. bears. Absolutely looking for the equal low, looking for the daily reversal, given the right shoulders in play at that point, probably looking at a daily trend reversal to the downside, right? But that's only here on the lower high that rejects this overhead supply once we take out this thin structure and give an attempt, right? If the market rallies through this, I would become neutral again, and I would still maintain the opportunity for range compression, right? You could probably come in here with some sort of fancy trend line and do this. You could probably do something that looks like this. And if we we break and then we do something that's back in here, maybe it's a break of the trend line that looks like that. That's fine, right? That's fine. We'll take that in stride when and if it happens. But with the forecast open here, my first priority would be, okay, do we do this? And if we make it to 566.50, my first thought would be long, then substantially reevaluate here. I don't want anybody to maybe misinterpret what I'm saying about the long off of 566.50. This is not, oh my God, we're longing 566.50 to go back to the all-time high. This is we're longing it for the first idea of a counter trend move relative to the breakdown of balance, and then we're severely reevaluating, right? 569.85 is the bottom end of the range. If sellers step up there, then absolutely, because of the nuance we already have with the possibility of a lower high here, I'm very open-minded to trading short side in the NASDAQ if we reject that. And then it gets even worse, as we just played out, if we're back below 566.50. Okay, if we do get the upside rotation, just to go through it one more time, if we get here, I'd be neutral through the range. I would not really like to trade or participate in that. And then I would only like the long on a confident hold over 573.35 to test 576.50. And once again, don't misinterpret what I'm saying, reevaluate at that level, right? Do we get a reaction off of it? Does the market pop back into range? What's going on with Nvidia, the underlying itself? What's going on with the SMH, the semiconductor itself, right? That is the essence of how to trade the NASDAQ when you're caught between the competition of the timeframes. Let's drop in our intraday anchored VWAPs. And what we can see here is a cluster, a bundle of support underneath us. So moving through this might not be the cleanest short. If we get to 566.50, maybe it's not the cleanest long either back to the upside, but the levels are so clean that I would try to take that trade anyways. If we come in with a Fibonacci, I know we didn't do this on the S&P, but I want to continue to reinforce it here in the NASDAQ because today's high of day was still unable to recapture the Fib 61.8. Obviously, if you take a pullback Fib on the S&P, you're at the all-time high. It's a 100% retracement, okay? So this rejection here is kind of the final line in the sand for the sellers, right? To keep the pressure on, this is ideally where the lower high is set. Now, of course, we still have that 576.50, but Fib-wise, kind of playing out in terms of the ideals, so to speak, at the level. So let's clear that up. Let's take a look through the NASDAQ side of the market internals and see what we can learn here. Small volume inflows, a little bit of upside here, really, really flat, and just nothing to talk about in the cumulative build on the tick. You can see over here in the futures, again, Nvidia earnings pressuring us towards the lows of today's range. If we jump on over to the NQ market profile, any interesting nuances here? I'd say it's mostly the same, where, of course, you just have value here, value here. Value is slightly lower on Tuesday, but value was elevated in the profile from today. You can see the overnight activity on Nvidia earnings is underneath that value area. So in my view, we did this with the group, but 511 right around in here is the composite value area of this overhead supply. If you're under 511, I think the door is open for a little bit more of that breakdown. If you're over 511, I would expect more of a balance range here in the NQ futures. We do have decent excess on the highs, but if we go back over to the ES, I think I said I was going to show you this, but I ended up not. Let's just zoom in here. Lack of material excess at the highs, 1 TPO of excess, really the improper end of the auction. It doesn't mean it needs to be repaired today. Could be repaired tomorrow, the next day, the day after that, next week, next month. It's something to carry forward at the all-time high. It's just that it's a poor high. Okay, so going back over to this, any other nuances here? Great excess in A period, but that doesn't really matter given the open lower here. I think it's mostly about the value area that's above us, just the trapped overhead supply. That's been the theme, basically, of today's analysis. So if those people are going to capitulate longs from this box, that's really what we need to see before we start trading those shorts down into the level that we just mentioned. Let's take a look over at the IWM, what's going on with small caps through all of this. Would you be surprised if it's unchanged? Let's go to the IWM. You shouldn't be. You can see in the after hours, we're right up towards the close, basically 235.84 by 87, right around in here. So right around in, 235.84. Did I say 35 or 34? It's 35, 235.84 by 87. Anyways, right around in here towards the close. So not a shocker considering Nvidia has no bearing really on small caps. And all things considered, this looks like a much more successful breakout over the top end of 2 inside bars right here. As long as this continues to stay over 235.15, this should hypothetically dampen the pressure to the downside in the S&P 500. Now, if this fails promptly tomorrow morning back under 235.15, I would maybe keep an open mind for at least a test of this prior high at 231.50. I would be more enticed to the downside, that thin structure retracement. Let's go to the hourly. You could see this. I'd be more enticed to the downside if we actually failed this high from back here. I think the overnight, like we talked about in the other indexes, the overnight did test that level, but if we started to break underneath that, that's really where there's nothing here until the retest over 228.65, right? And that would be the downside trade to potentially watch for. But again, without Nvidia, there's actually some beautiful consolidation high and tight into the close over 235.15, the highs from the Friday Fed session of last week. So all things considered, very, very clean levels to watch. Hold above, rotate to the upside. Next major target is 239.10. Some room to run on that. And if we do come back down into range, then fine, maybe it's a head and shoulders, but I would not short the head and shoulders until you're underneath at bare minimum this low, but more appropriately what we were just talking about here at 231.50. If we take out our fib from the bottom of the move to the top of the move, there we go. There is your 38.2. Once again, classifying technically all of this as bull flag consolidation until proven otherwise. We can come in here with our intraday anchored VWAPs. We're above the entirety of the stack, which is not quite true for the S&P 500, right? And once again, look at the stack clustering up here towards that 231.50, reinforcing the level. Let's come in with the Russell side of the market internals. A little bit of volume inflow, small upside in the advanced decline line, small upside in the cumulative build. Not much to really write about in that. Write home about on that. Let's jump into our Rusty Rut. On the market profile, I think it just does a couple of things. You repaired this poor high, and obviously a period straight shot higher. So a P-shaped profile looks a little bit more short squeeze-esque for today's session. I like that the point of control was over the high from Jackson Hole as well. Once again, this is not really in jeopardy yet of putting these traders off sides as overhead supply. And if we could stay over Friday's high, which is just simply right here, around about 23.75, buyers are in control out of the Russell, and that should, once again, the main reason we even talk about the Russell, it dampens the downside pressure on the S&P 500 as we're watching to see reactions over there as well. Let's get back on over to a clean chart of the S&P 500 and start talking about our sector watch here. So who was leading, who was losing, and where was the weight today? We had energy leading the week. This is the weekly. We'll check in on the daily in a second because we made a new all-time high today. So energy leads the week, followed by semiconductors, then tech, then discretionary and financials. All of that is bullish relative outperformance. At the bottom end of the barrel, it's staples, healthcare, utilities. Posture is bullish here if we're looking at weekly performance. This is subject to change tomorrow. If we take a look at the move from today's opening print as we made the high, this is where we might say okay, let's hang on a second here. The XLE performs the best today. So energy, lighter weight sector, it's not necessarily defensive. Materials, the lightest weight sector, outperforming the S&P today. The bond market outperforming the S&P today. And then it's the semiconductor sector. So all things considered, today's actual rally to the upside to print that brand new high, not really all that compelling in terms of posture on the intraday. So we'll see how this develops given the fact that obviously Nvidia is going to pressure the tech side of the house and semiconductors lower. But let's check the structural charts. Energy, it hasn't broken the range yet. If it does rip through the gap, I suppose it continues to indicate rotation in the S&P sectors. We'll watch it, but no comment for now. Same thing out of materials. If it breaks the high here, maybe rotational. It might dampen the downward pressure in the S&P, but it shouldn't save the day. If we look at the bond market, small uptick here. I think that this is just madness with the whole Lisa Cook thing, the Fed. We'll get to the Fed segment when we do, but bond market is just stuck. Interest rates are really just stuck. I think it's kind of actually incredible that with some of the volatility in the headlines, the market's not doing much there. Semiconductors, obviously this is opening lower, 294.14 by 40. 294's 14 by 40 puts us right around here towards the lows. This is a very simple watch. The SMH needs to hold over 293.15, otherwise the bears start to step up. So consolidation here is fine. Something that looks like this is all right. If we drop this and Nvidia just really falls off of a cliff tomorrow, that's the concerning part. Okay, so watch 293.15 like a hawk tomorrow in the SMH, daily 20 SMA. If we can hold above it, then we're doing all right. I would not throw the towel in on the bull thesis if we're above. If we do something that looks like this, we'll want to remain long. If we drop that level and start to do this, now of course, just like the QQQ, there's your head and shoulders. Ultimately, your neckline is still way down here at 283.20, but you can observe the threat and quantify it when and if we get the breakdown. Let's take a look at the financial sector. Brand new all-time high today. I will say, as the second heaviest weighted sector by market cap, although it didn't perform in terms of percentage points at the top of the list, it is still a nice look. Seeing financials carrying the S&P into those new highs, that's helpful. XLK, a little bit better than the QQQ, noting the break over these highs. Obviously, with Nvidia earnings, it's not going to open there. We have 262.25 by 50. That puts us, where does that put us? Right around here towards the lows and underneath the level. So please keep your over or under on the XLK at 263.50. Let's move into communications. This looks fine here. Bullish consolidation in this zone. Not really getting overly impacted by the Nvidia earnings. So we'll watch to see how this plays out. Some kind of funky business here with the bid-ask spread really wide, 116.50 by 110.25. Something's wrong there. But tomorrow, as long as we're over 110.50, I would maintain the bullish stance, looking for upside over time. The trend is up. Let's move along to consumer staples. A little bit of lift here on today's individual session over 80, just in the balance range. I'd be much more concerned if this starts to break down. Noting the failed breakout here, this would be just huge trapped overhead supply. The good part is that it's a defensive sector, but you can't really escape what that means in terms of the consumer. It's literally consumer staples if we're breaking below 80 more aggressively. So it's a watch. Let's continue along with real estate. Not much to comment on over here. Let's move into discretionary. Chart looks great in terms of the breakout sustaining this high and tight consolidation. Failure to go higher on today's session, but if we can just consolidate over 232s, that would be all right. Pretty wonky bid-ask spread in the after hours here as well. Even if here's another one. Let's say we pull back, right? Moves through some of this thin structure there. I still think, given that there was an overshoot here on Thursday of last week, you could still yield a higher low on the daily over 227. These previous highs acting as support, daily 20 as confluence. I mean, obviously into the end of the week, that would offer some downward pressure if it were to happen over the span of 1 or 2 days. But for now, I can't get overly bearish on it until it's actually underneath 232 in the short term. And even at that, once again, this is a higher low shot here. Let's jump into industrials. Chart looks fine. Really not a big comment here on industrials. Let's jump into utilities. Same thing. Fine. No big comment. Healthcare. Top end of the balance range, possibly putting some downward pressure on this. It seems reasonable that after this lower high attempt today, we could probably attempt the gap close as the next major idea. So mean reversion off the top end of the range to the midpoint, and then we'll reevaluate when and if we get there. The time when really healthcare becomes more compelling of an argument is like when this happens. When and if that breakout happens, we'll have something more compelling to say about it and what it's doing for the S&P as an overall marketplace. But for now, just range rules in play. Mean reversion off the top end of the range. Can we close the gap? Let's jump into the ratio charts because this will tell us a little bit more about whether or not we should lean risk on or risk off. If you're not familiar with ratio charts on Thinkorswim, check out the video tutorial in the top right hand corner. Tech sector still looks okay. Upward sloping 50 SMA still. This is starting to help a little bit more. It would be better if we could flip over the downward sloping 50 SMA and actually build out the uptrend further, but a step in the right direction. This looks great out of discretionary, and I would say that communications are also looking okay via the higher low and the hold over what could be considered the inverted head and shoulders neckline. We don't have risk off here. We don't have risk off here, and we don't have risk off here. If we move into some of the additional watches on the AB set, you can see that we're still doing okay. We've definitely neutralized. We know that we've talked about this. There was a breakout here, staples versus discretionary, neutralized here, and this is kind of wonky. You could draw like this, or you could draw like this, generally. So all things considered, I can't flip to risk off given these relationships, but we do have to acknowledge the slowdown in terms of risk on. If we move into the B set, you'll notice that the gold ratio, small uptick here, nothing that's going to change the trend overall. The TLT ratio, no flight to safety happening there. Bitcoin's starting to get a little bit interesting because it's retesting the inflection point on the daily from where it broke down from. So as a double top on the daily now, and yes, the swing on Bitcoin did get stopped out here, this is now a Brigade bolt underneath the level. So the question just becomes, does Bitcoin set a lower high underneath the neckline retest at 113,850? And therefore, do we start to trade more aggressive shorts on things like not so micro anymore, just strategy, MSTR? Do we trade shorts on, you could look for Coinbase. You could look to Robinhood as well for a little bit of that. Probably not as much. Robinhood obviously has a completely different business. It's not just a Bitcoin treasury, but you get the idea. Can some of these more crypto-related names see some downside pressure if we fail there? And also noting that this is kind of the only red flag in the risk on and off set that is aggressively leaning more bearish, right? We don't have big trend reversals in any of the risk on sectors yet over here. Bitcoin, however, via the double top breakdown, is the first one to throw the red flag, and I do just want to call that out as something that we're paying attention to, right? So let's move along to our dollar and interest rates. Again, very surprised that there's not more movement here given what's going on with all of this Lisa Cook and administration and Jerome Powell back and forth and this and that. I gotta say, I'm a little surprised at how contained the market is on that. If we look at the inverted ZT, I mean, we did have a contract roll in here, but we are moving lower. We know that the Fed is, Jerome Powell is basically saying, hey, we may cut interest rates in the next meeting. If we look at the Fed tracker tool, we could just quickly give this a little refresh. You can see that we're at 87.2% odds of a cut in the next meeting in September. I think that the CPI print in September will have a lot to say whether or not this stays at 87.2. As we know, this is really only accurate up to the day before. The Fed, as of right now, it's a sentiment check. The market's feeling pretty confident that the Fed will cut rates, and generally what that's doing for markets is we're seeing the participation across the small caps and some of those companies that are more reliant on loans. If we take a look at the calendar for the remainder of the week, GDP print tomorrow morning, as well as the jobless claims. I don't think the market's going to care all that much about the GDP print unless there's a massive miss here. It's the second revision, so unless we print like a 1.7, just massively different from this 3.1 expectation, probably a nothing burger. Watch it come in at a 1.7 now. But the jobless claims probably hold more importance for the market, simply noting that it's the absolute level. We got a big miss last week. It's not enough to really set things off, but back over 250, if we get over 250, that would start to be sounding the alarm bells for the labor market, which is kind of going to be a catch-22 at this point. A weakening labor market probably means that Jerome Powell will have to cut rates in the September meeting. So we'll watch that closely. PCE, probably a nothing burger. Market already has CPI as well as PPI, and this is just a blend of those two reports. So Friday shouldn't really be all that interesting. Really, where things do get interesting is next week. We, of course, have the Labor Day holiday, but manufacturing PMI from the ISM, then JOLTS, then the ADP non-farm preview, ISM services PMI, then the full Monty labor report here on Friday of next week. So that's what's coming down the pipeline. I think the market's going to care a lot more about that, especially now that Nvidia earnings are out, which, speaking of, there it is. There's the showstopper after the close today. Nvidia earnings reporting a double beat and raise on both the EPS and revenue. Yet the market's like, nope, wasn't enough. We talked about this in the Saturday, in the Saturday update video, that they would have needed to report somewhere around like a $10 billion increase in quarter over quarter, revenue, and it's just not. It's almost unfathomable. If you take a look at the announcement here, this is the one for tonight's earnings, right? You can see the revenue was at 46.7 billion here, which was up 6% from Q1. If you look at the last press release here, this is, you can see here, 44.1 billion, up 12%, right? So their revenue got cut in half in terms of growth rate. Obviously not literally cut in half, it was still growth, but the growth rate was cut in half. And I think the market's keying into the growth story slowing down finally on Nvidia. And there wasn't even anything Jensen could say in the call to sort of spur that on. I know we joked in the intro about the Jetson Thor platform and robotics. Until that actually shows up in the numbers, I think the market's sort of a little scared of, they had grand expectations, and unfortunately, you're not really getting that huge increase that you were once used to, right? So all things considered, not a terrible earnings report. It's just that the expectations from the market on Nvidia were so darn high, right? It's just wild. So expecting next quarter to come in at 54 billion, I mean, that's going to be, we'll see if they bring out the H20 shipments to China. China has already said that they're looking to produce chips domestically now, and maybe there's going to be less interest in the H20s, and we'll see how that all plays out. But look at the difference, obviously, between 54 billion and the 46.7. Let's just do the quick math on the screen. Let's go, what do we want to do? 54 divided by, what am I looking for here? 46.7. There we go. So about a 15% increase on the quarter over quarter. I mean, with a 6% down from 12%, they're really going to have to start kicking butt over in China, as well as see continued CapEx spend from the other companies actually show up for that to take place. I don't know. I'm not convinced on it, and we'll see where we go from there. So that is the earnings breakdown of Nvidia. And once again, it's just that expectations were too high headed into the report. And I think that even this is staging a pretty lofty expectation for the next outlook. Remember that the market was kind of looking for 56 billion. That's another reason why there was some disappointment there. So just in terms of the numbers, disappointing, but not bad. It's not like the AI story is over and done with. It's just that growth is ultimately slowing down a little bit on the quarter over quarter. So we've spent enough time here talking about it. Let's jump back over to the platform and let's finish up our technical run through. We've already looked at this ratio. Let's jump into the bond market relationship because it's getting very close to a breakout. It hasn't done it yet, but with the possibility of, you can go find the direct quote, right? I think Trump was quoted as saying, we almost have full control of the Fed or something along those lines. If the Fed is seen as like this non-independent thing anymore, and we're just going to cut rates and make money cheap again, maybe this breaks out and tells us that the bond vigilantes are stepping up and trying to say, hey, we're selling the heck out of the bonds because we think that long end rates need to be higher, or we're just demanding higher rates ultimately, and we don't want to hold these things anymore, right? So I'd be watching this relationship very closely. And it's not my opinion. It's just the opinion of the bond market, which is quite literally the second largest market in the world. Outside of the currency market, it's the largest market in the world. So, take that for what you will, but the long end of the curve is starting to do a little bit of heavy lifting, which will be concerning if this breaks out more aggressively. That's, again, just a pure interpretation of the data point, not really putting any, thoughts or, opinionated spin on that. If we jump into the credit spreads, you can see here we do have a divergence, and typically these divergences do resolve in the favor of the broad market continuing higher or risk-on look. Generally, this will roll over to pair up with the SHY-HYG, so we'll watch that closely over the next couple of days to see if it does come back into sync, but I wouldn't be overly concerned yet. If this starts to pick up, that would sound the alarm. We're just not there yet. Let's take a look at junk in isolation. Did catch a bid today and get follow through in the upward direction a little bit more meaningfully than in the S&P 500. If you just compare the slope of this new high versus this new high, obviously a little bit more aggressive in the junk market, which is a risk-on indication. We looked at Bitcoin. Let's look at breadth. We mentioned this on the internals. Small uptick, sideways on new highs versus lows. Really not a concern in breadth. It's seemingly an isolated incident so far for Nvidia on this move lower through the overnight. You could see here on the RSP, we're still holding up over this previous high, which is bullish ultimately for the S&P 500. We know the concern steps in when we look at the QQQE, which just can't really make it out of its own way inside of this balance range here. So we know the NASDAQ's weaker. That doesn't really shock us. Let's take a look at the volatility index. VIX is lower. VVIX is lower. Dare I even show you? Really not much commentary here on vol. If we look at the volatility futures, we do have strong contangos across the board. Same thing here. The one-day VIX, in my opinion, just spiked purely based on Nvidia hedges. Doesn't really seem like a substantial shift in the structure of volatility overall. Let's just give this a reset, and then we'll jump into our core list of companies, kicking things off with none other than the one, the only, Nvidia. What do we see here relative to the market maker expected move? Well, market makers, aka the options market, was pricing in a high of about 193.11 and a low of about 169.90. Obviously, we're coming up shy of the low at 175.90s, so market makers will win once again. Anybody who bought puts is probably not going to get paid on the open, and anybody who bought calls, just forget about it. So as of right now, I would think that the key level and the obvious technical level that we mentioned in the intro is simply right here. I mean, it's not a shocking level. It's not this big secret, but if we can reject the previous day's low, today's low, the daily 20, all of this overhead supply, then anybody who started getting long in anticipation of a home run knockout Nvidia earnings report, they're the first group of people to get disappointed on the breakdown here. And then when does the daily trend really change? It's underneath this low from the breakdown of what was now, 2 weeks ago? If we can break underneath that low, which is the earnings market maker expected move, daily 50 SMA, you obviously have a daily trend reversal. Maybe I shouldn't say obvious for the folks who maybe don't know or just aren't looking, but there's your double top, and this is the actual neckline, right? You finally will have a lower low if you break underneath that spot, which is roughly around 170. So your key levels on the Nvidia daily time scale to understand whether or not the AI growth story is over in the short run, or if we're going to ramp back up based on this Jetson Thor robotics platform, is simply 179.25. If the market stays below that, I think that absolutely there's a threat of this neckline here and the daily 50. If we take out 170, I mean, you just start thinking about this gap structure that exists underneath us. You start thinking about some of this. In the lockout rally here, there's an unfilled gap that I've removed here. There's an unfilled gap that I've removed here. Now, I'm not trying to be doom and gloom. I'm not trying to call for Nvidia down to like 145 in the blink of an eye. I'm just thinking about the chart as a structural chart and how trends develop. The trend is neutral now on Nvidia. We are not in an Nvidia uptrend anymore on the daily. This is a set of highs. This is an equal/lower high. This is a low. It was kind of an equal low to what we had back here. This is balance. And if this balance starts to break, I mean, I'm sure the Wyckoff distribution folks will just say it's exactly that. It's a distribution range, and ultimately it's game over, right? So those are the thoughts that run through my head on Nvidia. Now, of course, the counter argument to this would just be, all right, then riddle me this. If we open here, we don't reject 179.25, and we consolidate here, what say you then? Well, I would just simply say it would require a Brigade bolt out of this balance range before I would even think twice about trying to trust Nvidia, right? If it ultimately is picking up new money buyers in here, I don't want anything to do with the chop and slop through this range. I want you to prove it to me via new highs on Nvidia. I want the market participants to prove to me, investors to prove to me, that everybody still wants to buy this thing at new record highs, even after this earnings report, where we're starting to see some growth slowdown on the quarter over quarter. So that's my take on Nvidia. I don't even think it's worth, I mean, we could look at the hourly if you really want to see it. I'll show you the extended hours here. I mean, you could see, right, we're kind of right around this spot. I think it's all about the gap rules. Gap rules tell us gap fill reversal is a primary idea, and because this aligns perfectly with multi-day lows and the balance range lows from off to the left, 179.25 is your key spot. So there's my little rant and rave on Nvidia and just the fact that it really hasn't been a great trader recently. It's not, I don't think we've traded Nvidia in quite some time. Ever since this range really started to develop and show us that not much was going on there, have not really touched Nvidia. So we'll watch and see how that develops, but those are the key numbers, and I'll just stop talking about Nvidia and move along to Microsoft so we can get the show over with. What do we see with on Softy? I think that it starts to develop a little bit of inverted head and shoulders look on the hourly. This is the last major low before this big breakout here. So 502.25 is your key level. If you can get over this neckline, perhaps, it might become interesting for a little thin structure retracement. But when and if we get here, that's where I would say a daily lower high at 518.50 still. If you take a look, let's turn off that blinding extended hours. That's, oops, we don't want to just unhighlight, we want to hide it. There we go. You can see it, right? Here's that inverted head and shoulders. So higher lows that fly over 502.25, then break the neckline here. I would really think the best trade is like either this and then this, or deeper here and then here. I would prefer to take the long through this thin structure retracement. That's 511.25. Longing into these upper wicks on this kind of recapture there doesn't really tickle my fancy as a top priority. If it does just consolidate here and then break under the lows, you got to call it for what it is. It's just a bear flag on the daily time scale. Let's jump on into Apple. Apple's not really interesting to me right now. You've got this overhead range to battle with. It's like, you know, still worth tracking because it's a heavyweight component of the S&P, just like Broadcom. But in terms of actionable trade ideas, I don't love it in this balance box overhead. You know, if you really want to watch something, it would maybe be the hold over 230 perhaps. Zoom in on that a little more. Over 230 or over the neckline of what could be considered a double bottom here around 229. So if you can hold this dollar zone right around in here, maybe you remain bullish, but I don't love it as a trade. Again, look at these upper wicks. Look at the lack of willingness from buyers to participate on those highs. Not thrilled. If we look at Amazon, this is actually a great setup here on the continued consolidation today. Over 230 breaks up towards this 230, 250 spot. If you look at the daily chart, you've got this little like developing balance range here right towards the highs of the Jackson Hole speech. I think that you have lows, higher lows, kind of equal/higher low. This is a higher low, trying to navigate back up towards the equal high there. So I'm really interested in Amazon over 230 still. It needs to Brigade bolt and prove it above. If we look at Google, what a great daily setup and decent trader today over 207.75. Unfortunately, though, it's closed back underneath. So with Google now closing back below 207.75, it's clearly underneath this low for a thin structure retracement through the Jackson Hole meeting or the move there. If you look at this, there's your little attempted hold above. It was good for a quick scalp above, but then now underneath, what did we just draw, right? There's your head and shoulders, already a lower high here. Underneath the neckline, there's not much. I mean, you get this level there at 204.25, and then ultimately the lows at 201.80 as the next major target. So Google is going to be a top contender for a potential short tomorrow. If the broad market rolls over, I would easily reverse the idea from today, take the profits from here, roll them into a possible short, and then look for some downside through some of this thin structure. I like Google on this potential reversal, right? You could even go out on a limb and say, no, that's the head and shoulders, right? It doesn't matter how you split it here. Underneath 205.70s on a Brigade Bolt lower high, looking for downside out of the goog. It would be a failure of this major previous resistance as well. Metaverse, probably starting to roll over for a fade here, finally finding a lower high up against that daily 20. It's kind of taken forever and been really grindy through this action. I don't love the prospect of a short into these lows. I don't love a prospect of the short into the daily 50. If it is going to be a short, and you can see this on the daily, literally, off of this lower high, then I probably just want to start trading it short under the daily 50 for a continued attempt at a closure of the earnings gap from back over here. That's 734 as the first spot. So, I mean, if it's got to be something, then maybe, let's do this. That's a funky zoom, but it works. Maybe this thin structure retracement towards the lows under 744, maybe, but I would not first start getting short in here, smack into the daily 50, smack into these prior lows. That just doesn't make sense risk reward wise, right? You really need to navigate the trade like this to begin, and then balloon runners if you're going to try to make it through. Or if you find that the market opens here, or it's just like initial opening drive that's too fast to catch and the market's trading here, I would not put on new shorts targeting this with a stop like that. That just doesn't make sense, right? So let's avoid that on Meta. Let's jump into Tesla. A little bit disappointing. I shouldn't even say disappointing, but it on the gap up this morning didn't really offer a clean long side setup to that target up there, unfortunately. So I guess what I'm saying is it needs to develop something new on Tesla if there's going to be a proper risk reward entry. Like, unless you're already long this thing from the moving average cluster, unless you're long from the Jackson Hole move, it doesn't make sense to be long here at this previous rejection point. And instead, I would just say this is the next best idea. Is there going to be some revisit of about 338.85? That's an aggressive ask. Right, if you take a look here on the hourly chart, that's the breakout level clearly. Do we get back there? And to get there, maybe it's this, right? Head and shoulders might emerge on the hourly. That's fine. Under the neckline, 345, trades into that low, or, well, I should say it's the low here, but it would be the prior highs. And then I would evaluate for a possible higher low reversal from here to here, right? That's how I would prefer to trade Tesla. We'll see if it develops that way. If it just consolidates up here, again, it's kind of like one of those balloons. You just got to let it float away. Right, here's our little balloon. What a terrible drawing. We'll let it float away up into the sky, and it's just going to be the next trade, being patient for up and over here, 356, rotation of 365. Another 10 points will be available if Tesla can get that breakout. Now, the daily candle does show us a look above and fail. We close back inside prior day's range. A little bit of sympathy to Nvidia earnings just with the whole AI relation there. And there's probably some sympathy that we were seeing in the other core list as well. But 345.85 by 46 puts us right around in here, let's say. So a little bit of a gap down for tomorrow. Once again, that puts into play that head and shoulders, right? If we're gapping down to roughly in here, rally rejections, gap fill reversal, there's your head and shoulders. There's the possibility of a breakdown into 338.85, looking for the long here. I would entertain the short, just noting that this is thin structure. Wouldn't shy away from trying to take that as a possible break should it set up. But when we get here, promptly reevaluating. So that's Tesla. JP Morgan looks great. We know that financials just printed a brand new all-time high at the sector level, making a tag at the all-time high here. Any pullbacks, any consolidation over this balance range looks fantastic. Let's move along to Palantir. Still seeking more information here, although, again, with the whole AI relation, you are slightly lower headed into tomorrow's open. You've got 154.94 by 86. Let's call it 155s. It's going to be right around in here, right at the daily 50. So unfortunately, I really don't see a lot of clarity out of this. I mean, you could argue bear flag on the daily for sure. There's nothing wrong with that. But if you take a look at the hourly chart, maybe double top. I don't really want to be short into this wick low. I don't want to be short into this wick low, this, and this. I would prefer, like, if it's going to go, you got to be below 152.50. If it's going to jump back up into here, maybe it's a breakout through this level, but I really think that the key level is this for that thin structure retracement. I've been tracking this for quite some time, ever since that breakdown, really. If it's going to get back on the bull side of the market, that 164.35 break is really key, right? That's where you get that more substantial retracement back through the gap close range from here. So watching that, but until proven otherwise, via the week open, I just don't like the prospect of being short into this level. It would have to Brigade bolt underneath with clear broad market momentum as well if it's going to be a short at 152.50. Moving along to Broadcom, what a junky, just, cruddy price action on this thing, but you're in a balance range. Obviously, you're opening slightly lower via the Nvidia earnings. You're kind of in here. So taking it one step at a time, much cleaner of a head and shoulders on the daily time scale. If we crack 287.25, as the sixth heaviest weight company in the S&P, it's got to be a headwind. We do have earnings still on the horizon for Broadcom, so going to let this one be up against this level. It makes sense to me that it's a lower high, but I won't action on it short until it's a very clean no-brainer setup under 287.25 if it wants to break that neckline in the first place. AMD, another one, kind of like Palantir, that leaves a little bit to be desired. Obviously opening weaker given the after-hours move on Nvidia. And really, it's the same thing where I would still want to watch the 169.50 level from back here to close the gap overhead, but I don't really see it as, with an open forecast at, let's just call it 165, an open here, tomorrow is probably not the day for that, right? I don't think so. If it turns up being that day, then fine, we'll trade it in stride if the conditions are appropriate, but I just think it's on ice inside of this balance range here. There's really not much to do. Let's take a look at Robinhood, which is a little bit more aggressive to the downside. We do have a change in tone out of Robinhood. We're starting to develop that classic Man Ray pattern. There it is. There it is. This is not Manta Ray. This is Man Ray, either the evil villain or the famous photographer. Let me know your preference in the comment section down below. But the lower high here clearly underneath 107.50 is a first start on the daily, but then on the hourly, the nail in the coffin is this lower high sub 105.50 because of the way it had been responding to that level so many times in the past. So this little, again, just nail in the coffin confidently changes the trend back to down. Daily trend threatens the lower high. And I think we just look for shorts here on Robinhood now. And once again, if Bitcoin can produce a lower high, it's probably not the core theme behind Robinhood moving lower, but it at least helps the downside as well there. So 103 will be a watch to get into these lows at $100.75, daily 50. Rally rejections in here keep the pressure on, just noting all of this as overhead supply. If there's some miraculous recovery over 107.50, I'll flip back to neutral and probably identify this as a balance range, and at that point you would be in the midpoint where I'm not all that interested in pulling off new trades. With that, that's the core list of companies. Let's jump into our additional trade ideas, completely unrelated. Let's just step away from the AI theme for a second. You guys ready? Not GD, not General Dynamics, GE. Not HEGE. Can we type? Apparently not on a Wednesday afternoon session. Look at this beautiful daily 3-bar play setting up with thin structure overhead, clean uptrend behind us on the higher time frames, and a nice target at 281. If we can get the break, take a look at this hourly chart, up and over 274.30, there is nothing but thin structure above into 281. I love this technical setup. The only issue I have with this chart is if you take a look at the options chain, the weeklies are going to trade virtually no volume here. Let's go to this, and we don't need all the strikes. 14 will do. There's no volume here, so please understand that. If you do trade the weeklies, you're going to probably get steamrolled by theta, but if you want to take this on some longer dated contracts, if you want to just manage your risk by saying the total amount of risk I'm going to take is my position size. If you want to risk $500, you buy one contract here at let's just say the 277.50 call. If you want to do it that way, I wouldn't call you crazy because the chart setup is just so clean. Previous resistance already acting as support in the low of today's session. Nice breakout level here over 274.30. I love the prospect of this move. Unrelated to AI, this is GE Aerospace, right? It's not even GEV for the nuclear theme on the energy front of AI. So all things considered, I like the chart. I really, really like the chart. I love the setup there. Let's take a look and continue along to the next one. Let's continue to stay away from AI themes to start. PEP is the name of the game. That is Pepsi, of course. This is about as textbook as it gets for a Brigade bolt, should it play out in the upward direction. Daily 20 is here, inside candle is here. If you could take out today's high, targeting the gap close, and then ultimately this over time. On the hourly chart, you can see there's your inside bar right here. If we take this out, which we did close above at 147.50s, if we could stay above that, I think the gap closes the first target, ideally initiating with risk reward that looks like that. Ballooning runners here and ballooning runners here. If you fail, right, anything that moves back into the range here, let it consolidate. And, if you're trying to swing trade this like that, then of course your stop would be underneath the inside candle low, underneath the daily 20, 146.25. Generally, I like the look of the Pepsi chart here on the daily time scale. It is fighting a major weekly downtrend, so do understand this. But on the daily, starting to become a little bit more constructive back in the upward direction. Let's continue along to another one that's starting to get a little bit closer. We'll go to Reddit. RDDT is the ticker here that we're looking for. And on the daily time scale, you can see this as a Brigade bolt underneath the previous all-time high, failing this in the upper wick of Friday of last week. Very weak close. If you take out these lows, I think you don't want to kiss it completely goodbye, but the door is open underneath this 209.50. If you look at the hourly chart, very, very clear. You could probably even subdivide the range here with 214.50. It was meant to be. Thinkorswim is already giving us that nice, easy round number. If you get bearish consolidation, put the pressure on underneath 209.50. It's really not much via this straight up move here until the gap from earnings back around 177.85. So I believe Reddit could be a look above and fail on the all-time high, starting to pull back, failing the daily 20, watch 209.50. That's Reddit. Let's start to ease a little bit more so into tech. Datadog, shout out to Steezy for the idea here, on a sympathy play to Snowflake earnings. Snowflake is gapping up, Datadog is gapping up. Now, Datadog has a very interesting consolidation on these lows where you're already getting a higher low, flat equal highs over, right? We're gapping over 132.10. If we can pull back and support above that, I love the prospect of 138, and then it really opens up to here at 147.75. If you take a look at the hourly chart, right? Here is your potential, call it a double bottom, call it an ascending triangle, whatever you want to call it, doesn't really matter. But when you bring in the higher high via the gap up, gap fill reversal, puts this in play and then puts this in play. No structure, no structure. If it gaps and goes, you could also have a trade on some sort of move to stay over the overnight high. We'll check in on this one in the pre-market prep tomorrow morning at 8 o'clock. That is Datadog. Let's get another step closer to the AI side of the world. Let's go IBM is the first one, and then we have one more. So IBM shows us that we have a clean, let's go to the daily, a clean break over these highs with thin structure into this. Now, the trouble is that you are ultimately in a downtrend, so please respect that. But we finally recaptured the daily 20, and the 200 is going to act as your first target. If you take a look at the hourly chart now, I like the fact that this is building out as higher lows, equal highs. So there's two ways to get involved. Number one, that's supposed to be a 2. There's 2 ways to get involved. Number one is that we open high and tight. We do not pull back to 243.25, and we just Brigade bolt over today's high into tomorrow up at 248.75. Some kind of risk reward like this would be the play. If we do pull back, seeking the morning washout to target the equal high and then something like this, that would be better risk reward for this, and then ballooning runners to do something along those lines. If it is going to just immediately like this, you could probably pull off along into this pivot high as well at 254.75. Let's go ahead and throw on a gray dotted line. Perfect. That would be this, and then here, noting the thin structure breakdown that initiated this entire second leg lower in the first place. Okay, so those are the numbers. That's the setup on IBM. Obviously, in the after hours, it looks slightly lower, but really not all that bad. 143.84 is the low spread, which is kind of in here, midpoint of the prior day's range. Let's jump into the final idea I've got for you, which is AMAT, Applied Materials. Shout out to Mike. And what do we see on this one? I know it's one of the usual suspects. What do we have? Let's take a look. Inverted head and shoulders, right, on the hourly. Everybody can see that. Here it is on the daily after a major earnings gap down. So here it is. As of right now in the after hours, 164.01 by 163.50. So it's not like all hope is lost. We're kind of opening in the midpoint of this range. I think if this can get in gear, do something here and then here, I'd be interested in longs, right? This neckline is very well defined at 164.65, but this hourly level is worth respecting as well. So it might be like step 1, get here. Step 2, break over and target the top end of the gap. That's here. Great risk reward potential. And then into the gap, just balloons it even further. I'd respect the daily 200, respect the daily 20. But really, there's a massive gap to close overhead. Could this be the start of a little bit of a counter trend back in the upward direction? Seems like it might be based on the premise of this base, quite literally, starting to build out. So that is the 6th and final trade idea I have for you in today's episode of the Midweek Market Update. If you enjoyed the video or learned anything new, let me know down below in the comments section or by giving the video a very simple thumbs up. You guys know the deal. If you want additional resources, they're all linked down below in the description. One thing to make note of is that we will be live tomorrow morning at the 8 o'clock Eastern time frame for another episode of the pre-market prep, where we will in live time analyze the most up-to-date information on Nvidia and build a trade plan headed into the bell at 9:30. So once again, if you enjoy this stuff, let me know all the stuff. YouTube tells us, say subscribe, say comment, like all that good stuff. You guys know the deal. Have yourself a green and profitable, fantastic end of the trading week. We are through the Super Bowl of earnings. And as always, I will see you in the next one.